So guys, we will do the WACC for Apple. So how do we get the weight of the debt and the cost of the debt? Imagine that you have a million bank loans. So how would you calculate the cost of the debt? It would become a very hard task because you would have to do a weighted average of all the loans that you have. So rather than doing that, it's just a simple matter of you have something in the profit and loss called interest expense, right? If you look at Yahoo Finance, you go to financials of Apple, INC, and you go to the income statement, you have something called interest expense, which is currently at 2776. 2776. The reason why I painted in yellow, it's because these are inputs. This means that this is something that we have to type, okay? And the green ones are just equations that you won't have to touch. This is a WACC calculator that I want you to have for your future project evaluation, okay? And business evaluation. So the first thing that we need is the interest expense. And then we just need to figure out the total amounts of debt. So you go to the balance sheet. Just have in mind, guys, that you shouldn't have you don't have to consider payables debt because this is suppliers, okay? They aren't giving you a credit with an interest payment, okay? So we don't want to alter the interest rate. We only have to use what we can identify as financial debt. This is the main reason why when you have a balance sheet, the breakdown of the accounts in the liabilities are the payables and accurate expenses, which are the suppliers, and this is the current debt, actual financial debt, okay? It's to make easier the process of knowing in short what's the amount of short-term debt, financial debt, okay? Remember, it's not the same. And we also have the same element in the liabilities. As you might see, most of the long-term liabilities are debts. It's very hard to have like a supplier that it's long-term, okay? You might see the case, but it's very hard to watch to see something like that. So we have this total amount. So the only thing that we need to figure out is if I'm paying $2 million, but I have a total debt of 124, we are just dividing the interest compared to the total debt, and this gives you a very close amount of the financing rate of Apple. Does that make sense to you that Apple is financed at 2.23%? Does that make sense to you? Loan rates in the US are very close to the treasury bond rates, okay? They have a very nice system to qualify or to measure the risk of your company and even the risk for people. The lesser the risk, the fewer the interest rate that you will charge. If we're talking about Apple, it makes sense that they are considered as low risk. They even are a part of the NASDAQ index. So it makes sense to have the 2.23 of cost of debt. But guys, there's a thing that you have to also consider. This is the interest rate, but who can tell me the elements of a profit and loss statement? Talk to me, guys. What are the elements of the income statement?
Income, expenses.
Income, cost, Natalia.
Expenses.
Expenses, operating margin, right?
Yes.
And then?
In order.
Yes. Well, after operating margin? What comes next after operating margin?
Gross margin.
Come on. Glenn. Income, cost, gross margin, expenses, operating margin. After operating margin, what comes next?
Income.
Financial income and cost, Joaquin.
Yes.
Cost. Okay. And after that?
What is, ¿qué va después, bro? No tengo señal.
Financial income and cost. What is the financial cost, guys? The interest.
Income.
And the income are also interest, but the interest that we are winning. How do you win interest through a company? With the correct use of your funds, you can reinvest the funds that you are not using and earn some interests, okay?
Yes.
So, guys, after that, what comes next?
Earnings before tax.
Earnings before tax, then tax, and then net income, right? This is the important message of this thing. We are considering that the average interest rate for Apple, it's currently 2.23, but that's before taxes, guys. Taxes, interests are tax deductible. That means that the 2.23% is actually not real because you are not including the tax deduction effect. Okay. So how can we decrease or subtract that effect from our interest or average interest rate that we just measured, the 2.23? Well, you go to the income statement, of Apple. Are you watching my screen?
Yes.
Yes.
And you have the pre-tax income. The pre-tax income and after that you have the provision or what they are expecting to pay to the IRS. So we can. Oh, and guys, I know that the C Corp tax break in the US is 21%. And in Mexico, what is the tax rate for corporations? It's 30%, okay? 30%. But does that mean that companies actually actually pay 30%? So we have to know what they are actually paying, because that's, you need to figure out for the tax strategy, and by the end how much they are actually paying. How can we know? It's basically the way I'm doing it is you have the earnings before taxes, and you have the tax expense as a projection for Apple. So you just figure out, you just divide the tax provision compared to the earnings before taxes. And they are expecting to pay a 15% tax rate, effective tax rate. I know that the tax rate is 21% for C corporations, but the effective tax rate that they are paying is 15%. Okay. And it happens always, even in here. Bimbo doesn't pay 30%, even though the SAT, la Secretaría de Hacienda, requires them to pay 30%. They use a lot of tax strategies to lower down the effective tax rate. And you always have to do the same thing. Figure out the effective tax rate, because once you have the effective tax rate, you only deduct from that tax rate the interest rate. How do you deduct the effective tax rate? It's just a matter of multiplying the interest rate, the average interest rate, times 1 minus or subtract the effective tax rate, because then it means that you only have to consider 80%, 85% of the tax rate. Okay. This is the effective cost of debt, the effective cost of debt. Okay. And we just have the effective cost of debt from Apple. They are just paying 1.88%. Amazing, right? Remember how much was the weight of the debt compared to the weight of the equity? Why do you think that they are being financed with debt? Because it's cheaper for them. This is the analysis that you all have to do for your companies. You have to figure out if it's cheaper to get financed by equity, that it's not easy to get equity, and maybe it's expensive to have equity in your companies, but it's better than having to give a house to the bank in order for them to give you a loan, a 25% loan. So we have the cost of the debt, guys. The previous class, we saw the cost of the equity. We can watch it again. How did I get this 2.77%? Guys, how did I get the 2.77%? Hello. Are you there, guys? How did I get the 2.77?
With no. No, you grab the tax provision.
No.
I don't know.
Anybody else's, guys? Hello, hello.
We are trying to figure it out, mister.
2.7, where's 2.7?
Showing you.
No sale nada,
No.
teacher.
Mister, we're still
In Apple Inc.
Oh, come on, guys. I was showing you Excel's.
No, we were not in Excel. We were in
I know, but I
PowerPoint.
was speaking like from the Excel point of view.
Ah, we were understanding
okay.
anything. Okay.
Okay, guys. Go. You have your Yahoo Finance open,
Yes,
and my right now you're watching the Excel, right?
that's
So
I will go back again. So the cost of the debt, you have the interest expense. Go to your income statement and take a look. Where do you find the interest expense? Who has find the interest expense, guys? Anybody?
2,707,000.
Exactly. And then the short-term debt. But remember, the financial debt, not the short-term liabilities. How much do you have? Anybody, guys? Short-term financial debt. How much? What's the short-term debt, guys? The short-term debt amount?
Short-term debt payment.
How much do you have?
Okay, it doesn't appear in the 2021. It appears in the 2000. No, sí, 2020.
Oh, Grecia, you have a very, very nice. I think I'm wrong with the interest expense. Is that the interest expense of TTM or 2021?
TTM.
I did the same mistake. So
Okay, when I was search the other one, but the short-term debt payment is minus 963,000.
Sorry, I did the same mistake, Grecia. So can you tell us the interest expense of 2021?
Okay, I'm going.
And anybody who can tell me the short-term debt, guys, short-term financial debt?
Is the interest expense not operating?
It says interest expense.
I already write it in the chat, teacher.
Oh, sorry.
2,645,000.
And then the short term financial debt. Where do you find that?
Cash flow.
No. Balance sheet.
Yeah.
Balance sheet.
¿Cómo quito mi este?
Teacher, but it only appears the total debt and the net debt.
No, no. It appears current liabilities or short-term liabilities, and then you have something called accruals and prepaid expenses, something like that. And then you have debt, right? In the current liabilities, not in the long-term liabilities, short-term liabilities.
Current liabilities,
Current
Okay.
liabilities, open it.
current
and you-
debt. It is current debt.
Current debt. That's the financial debt. That is why it's in another account.
Okay, so current debt is the short term.
Mhm.
Okay, I am sending to you.
Okay.
And the other one,
Exactly.
and the other one is non-current.
The other one where it's the long-term debt, long-term.
Exactly, the non-cur. Okay, long-term here.
Mhm. Grecia, that amount is incorrect. What are you watching? The correct amount is the one that Natalia is providing. Okay, awesome. But you are in the same line, okay? No, no worries, no worries. I need you to do mistakes, but I need to figure out what you're getting wrong. Awesome. The second one is long-term, yes. And it's the, yeah, 109, okay? Perfect. Then it's a matter of just dividing the interest expense against the total financial debt. And you will get the interest rate, the average interest rate. Average yearly, because this is 1 year average rate, okay? But as I told you, we have to deduct from that rate the deduction aspect that you're allowed to do, because you can deduct taxes from that. So it means that you will pay less taxes. So I need the income tax expense or the provision of income tax and the earnings before taxes. What are the amounts?
Teacher, what do you want us to look for?
Earnings before taxes and the tax provision, so we can know the effective tax rate. Anybody, guys? Earnings before taxes, how much?
I found the teacher.
It is the pre-tax income.
Exactly, exactly. That's why I'm telling you, it's not Natalia, that's the long-term debt, no? Or it's that let me see.
No, it's the pre-tax income.
For 2021?
Yes,
Okay, okay.
it's almost the same, but it's not.
It's okay, it's okay. No, no, no. I get you, I get you. It's just let me correct what was wrong. Okay, the pre-tax income and the income tax, sorry.
Does it has
Teacher was Rajon, was Natalia right?
Yes.
hi Glenn.
Hi, Natalia Rajon.
Hello. Teacher, income tax expense.
Yes. Income
Um,
tax. It's
what do you-
after, it's right after the pre-tax earnings or pre-tax income.
Pre-tax so it's no before pre-tax income it is other
Uh-huh.
income expense. So it is
No, no, no. It's after.
after is tax provision.
Exactly. Tax provision. That's a tax expense.
Okay. So
That's why
So tax
I need you
provision.
to do it. Exactly. Nice. So guys, we have that Apple has an effective tax rate of 13%. Okay. So we have to deduct that 13% to the actual cost of the debt, the average cost of the debt, because as you paid less taxes, your effective interest rate is your average interest rate minus the tax effect, okay? How you deduct the tax effect from it? Like this, very easy. Okay? So your actual effective cost of debt is 1.84, which is very different from the 2.12, okay? Until here, are we okay? We just got the effective cost of debt, the cost of the debt, which is part of the elements of the WACC. So guys, cost of the risk. How do you get the cost of equity? Cost of equity. Who can tell me? How do we get the risk-free rate? What is the risk-free rate?
we need to find it in the NYU or something like that. Yes, no.
The risk-free rate, what is the risk-free rate, guys? What is the instrument?
They are
Risk-free.
the treasury bonds.
Yes. Where do you find the treasury bonds rates?
In the rate of return.
What? Where do you find the interest
In the
rate that the
CETES or-
treasury bonds pay? No, CETES is for Mexico, pero
Bloomberg says, right?
You tell me, what is the risk-free rate? You tell me. I need
WACC.
numbers. I need numbers. What the WACC?
See, it's a weighted average cost of capital.
I'm just asking, what is the risk-free rate?
What do you mean? What's the risk-free rate?
We just said, it is the treasury bonds.
Treasury
rate.
bonds.
Treasury
bonds.
certificates, yes. But what's the rate of the treasury bonds?
I want us to find it in the Excel.
No, you need to find it, and you need to tell it to me.
That's okay.
3.6.
Perfect.
Ahí.
Where did you get that, Grecia? How did you find it?
Yahoo Finance.
Awesome. Yahoo Finance, guys. Yahoo Finance.
Pues
Very
ahí
easy.
está, ahí estoy yo también.
Well, you find it. And tell it to me. Now we need the beta. Where do you find the beta? Tell me the beta of Apple.
It's the
It's 3.3, not
stock.
3.6.
Teacher, it's a stock.
No. What is the beta, guys, for Apple? Who can tell me what is the concept of the beta?
It's the
Correlación con de
it's
las
the
empresas
medida
con
de
el sector.
correlación de una empresa con su sector.
Very good, very good. So where do you find that correlation statistic? You will have to find it. You will have to find it in Apple, right? Because we're asking Apple's correlation. So once you are in Apple, the beta, where do you think it will appear?
I think it appears in summary in Yahoo Finance.
Yes.
1.23.
She's right. She's right.
Exactly. Exactly.
Good job, Natalia Brahan.
And the market returns. What are the market returns?
What the other
Rendimiento de
companies
mercado.
offer. Are the returns that other companies offer?
Should it be a percentage, the market return, or is it just a
It's a
number?
percentage. Always returns are percentage.
Okay.
Mister, where do you find the risk-free rate?
Who can help us with that question, guys?
No, because I sent a
We're look-
link and
we're
that's
looking for
the
the
information that I found. That's 3.66.
Okay.
I
let
found it
me
in
check it.
Yahoo Finance, but I'm not sure if it's right.
Is that rate that the bonds offer?
Exactly, but let me see what
Pero
you're
estoy
watching.
diciendo que en qué parte la encontraron.
It's markets. You have to go to the markets tab and US Treasury bonds rates. Okay. In Yahoo Finance, you have finance, home, watch list, my portfolio,
Teacher, is
cryptocurrencies.
market return the same as market cap?
I don't know.
Hi, teacher.
I need to see it. Re-
The share
re-
screen.
Remember, terminologies always change. I can tell you yes, okay, but I'm not sure.
Holders.
Go ahead.
Ah, yes. I don't remember now.
No, yeah, market capitalization. Do you mean what were you watching?
No me acuerdo, teacher.
Market cap?
Ah, yes, market cap.
No, that means how much they have raised in by selling stocks.
But where can we find the market return? That's an investor's perspective.
Where do you find the market returns? Will you find them
The
in
cost of
Apple?
does it include the cost of equity?
It's an element of the cost of equity, but will you find the market returns in Apple?
No.
Just Google it. Market returns.
So the CAPM is the market return.
The market return, it's from Apple. Glenn, hear me out. Is market returns a thing of Apple? We're speaking of market returns, the whole market, not just Apple.
I don't understand, teacher.
Erase Apple. We are expecting market returns, the market, the whole market, not just Apple.
Yeah, so it would be technology. ¿Cómo hideo esto?
So guys, the market return is 21%, okay?
We can't see that here.
Google Nasdaq, because if you see in the Apple Just put NASDAQ returns by year. NASDAQ returns by year. We want a yearly return. Does the 2022 has finished? No.
No. So only
We can't
2021 would appear.
exactly. And the 2021 has ended. Go back.
Here?
Yes. In there you have annual change. That was your return.
Here?
Up in the table, which is yep. Go to the right, go to the right. Annual returns. Apple is part of the NASDAQ, okay?
Okay.
So we have 2139. Awesome. You have found almost all the elements that we need. 21 what? 0.39. So guys, we have the risk-free rate, the beta, the market return. So you just have only to apply the formula, right? It's the market return minus the risk-free rate. Okay. What is the risk-free rate? This one we have to deduct. That deduction, it's called market premium. The market premium, which is 18%, okay? 18% times 1.23 plus the 3% gives you the cost of the equity, which is 25%. 25%. Okay. We are just missing the total amount of debt and the total amount.
Oh, look, I found the market cap. Yeah.
In the first page of Apple, my friend. Market cap means market capitalization. How much of the market you have acquired through your shares by selling your shares. Okay.
Yes.
That's what is market capitalization. We need to find total debt and total equity, guys. We are just missing the part of the weight of the debt and the weight of the equity. We already have calculated the cost of the debt and the cost of the equity. We're just missing the weights. What's the total debt for Apple? Total debt for Apple, guys.
124,719.
Awesome.
Lo envíenme en el chat.
Oh, sorry. And total equity?
It is total equity.
Teacher, I don't know where to look the information. I'm confused.
You
In
go
financials.
to Yahoo Finance, financials. Where do you find the debt?
I mean Yahoo Finance. I just didn't know which one it was.
Where do
It's
you
in
find the debt in your profit, in your statements, in your financial statements?
Cash flow.
In your cash flow. We haven't even reached the cash flow.
So it's in the balance sheet.
Yes, the balance sheet.
So
Teacher,
we're looking for the total debt. We're
Total
looking for
debt
the
is
total
there.
debt, teacher.
Yes.
It's 124 million. 700 and
The
19.
total debt is already there.
Yes.
We
And
are
what else were
total equity.
what else? Total
Equity.
equity?
Yes, I think it's 63.
Yeah, it's-
0.90.
So the stockholders' equity and the total equity is the same.
The stockholders' equity, yeah.
Okay. Okay, teacher.
In this case, yes. Huh? I don't know. You have to watch at the specific case.
Yeah, here it says all the numbers from the total equity gross minority interpretation, I guess. It says stockholders' equity are the same numbers.
Okay, from the whole cake, guys, from the whole cake, from the 100%, how much Apple is getting financed by debt? From the whole cake of how Apple is getting financed, how much it's getting financed by debt?
66.41%,
Awesome. And from equity?
33.59%.
So it's very easy. You just have to multiply the weight of the debt, which is 66 times the cost of the debt. That is why it's called weighted average cost of capital. And 33% is financed by equity, which the cost is 25%. Oh, that's wrong. I'm sorry. Okay. So what's the final amount, the WACC of Apple? It's 9%, 9.8%. Okay, guys. Until here, are
Okay.
we clear?
So that 9%, what does it reflect? The weighted average cost of capital?
Yes. We finally got.
What does that mean?
It means that this is the final rate that we will use in order to discount the cash flow projections of Apple. Remember that we were missing.
Does it include capital and debt?
Exactly, it includes capital and debt. And this is an example
So
of what we.
it says so basically it says 9% risk in comparison to the market.
No, that's not how you read it. You read it as the weighted average cost of the way Apple is financed is 9%. Why? Because they have been financed 33% from equity, and the cost of the equity is 25%. Why are they not using more equity? It's simple, guys. You're watching it. How would you prefer to get financed, with debt or equity in the case of Apple?
Debt.
Obviously.
With
Obviously.
yeah, with that.
Why you still have that much equity? Because you need to respect some contracts. Maybe in here we have the founders team and all the shareholders that invested previously to the IPO, when they could actually not afford to get to this cost of debt. Okay, we don't know. Obviously, they are increasing the debt because it's cheaper for them. Okay, and this rate is the one that we will use to get the net present cash flows of Apple. But I want to say this. I think it's a little bit hard to understand it through video, guys. You know how to discount things. That's very easy. But I need you to learn how to do the cash flow, okay? And we will leave that to for the next class, in presential class, the classroom, okay? So until here, are you okay, guys? Do you know how to get the WACC for another company? Do you want to do it for Marriott? Because we're watching the Marriott case.
Maybe.
I still have the doubt.
So we get.
Well-
I only have one question.
Mhm.
So we get all the numbers from the summary and the